So, Sciro members, we haven't posted one of these portfolio updates for quite a while. So, we're making a renewed effort to really share the progress of the Sciro flagship portfolio. And so, we're making a serious renewed effort. So, here's our first video for a while. Um, I'm glad to say that the Sciro portfolio is doing quite well. Initially, as you can see, for the majority of the year, it actually lagged its benchmark, the MSCI World Index, and also lagged the S&P 500. But in the past month or so, it really has had a serious turnaround, which has bring closer to parity. And this resurgence is largely due to the stellar performance of Alibaba, which is a substantial holding within the flagship portfolio. And this surge in Alibaba's stock was fueled by significant stimulus measures. As you can see here, this spike occurred around early September, which was due to the Chinese government implementing a whole suite, a whole raft of different stimulus measures. And this injection of liquidity has encouraged investors to re enter the Chinese market, driving up demand for Alibaba shares, shares for Tencent, Pinduoduo, and a lot of the other Chinese tech names. And so, given that Alibaba is such a huge part of the portfolio, I think about 10 to 12%, that is why we see that dramatic increase. And so, you see that for year to date, Meta and Alibaba are the two biggest performers. Meta contributing 10% of the return, and Alibaba 4.4%. Right? But when you look at the performance in last month, you see that Alibaba has been the one doing the heavy lifting. Now, it remains to be seen whether this turnaround in the fortunes of Chinese stocks is going to last for the long term, because there are some concerns that with the US elections on the horizon, that there may be further shifts in geopolitics and the whole geopolitical tensions. So, as an Alibaba investor, a long suffering Alibaba investor, I might add, I hope that this is not the case, and this could be that, a real re-rating of Chinese stocks. Because as you would know if you've been following this channel for quite a while, we've been investing in Alibaba as it's been dropping in price, dollar cost averaging down from about the 250, 275 range to where it is now. I think our average price right now that we have the stock at is like 116 or $17 or so. So we've been buying for quite a while, taking chunks every now and again. So I'm hopeful that this is a turnaround in fortunes. So we'll see how the flagship portfolio fares for the rest of the year. So those are our primary contributors, as you see here: Alibaba, as I said, in the most recent past, and Meta for a longer period of time. But in terms of detractors, our biggest underperformers have been NYCB, New York Commercial Bank, which has a lot of exposure to New York rent controlled apartments. But we're seeing a lot of the pressure being lifted off of NYCB as the US recently cut federal interest rates. And so we're hoping that we could see some change in the fortunes in terms of the price of NYCB. All told, I probably would not have invested in this company if I had the chance to do it all over again, simply because I've realized that I do not know as much about the banking sector as I thought I did. So I guess sometimes you have to pay to learn, and so a big part of investing is knowing what your limitations are. And I would say bank stocks and maybe finance stocks in general is an area that is not my area of expertise. So I will tread lightly um, when it comes to bank stocks in the near future. So, guys, so this is the update on the Alibaba. Well, sorry, it's not the Alibaba portfolio, it's a flagship portfolio. But we have a huge stake in Alibaba, so you might as well call it that. Right, so this is the performance update for our flagship portfolio. And if you want to learn more, please subscribe, like our social media pages, and of course, you consider joining our Patreon to learn more about our flagship portfolio performance and hear about some exciting new features coming soon.